Hi and welcome to ECCB Connects. This week we continue our discussion on credit reporting in the Eastern Caribbean Currency Union. Last week, Van Reynders, CEO of EveryData ECCU Limited, explained what credit reporting is and how it works. This week, he looks at the benefits to lenders and explains how credit reporting makes accessing credit easier for consumers like you.
It's a conversation with the Governor of the Eastern Caribbean Central Bank this Wednesday at 8:30 p.m. on DBS television. Join me, Lisa Joseph, as I engage Governor Antoine in discussion on the big push pursuing bold actions to transform St. Lucia's economy. We will also discuss the establishment of a regulatory commission for the Citizenship by Investment program, consumer protection in the banking sector, and economic prospects and challenges for St. Lucia. You can be part of this live conversation. Call us at 758-451-9788 or send a message via WhatsApp to 758-723-3333. Conversation with the Governor of the ECCB this Wednesday at 8:30 p.m. on DBS television. Also catch the live stream on the DBS television and ECCB Connects Facebook pages and YouTube channels.
Then let's go now to some of the benefits of credit reporting. And let's talk about it from the administrative side in terms of the lenders, the institutions that actually extend credit. How does this help them in the operations?
The primary function for a financial institution where we support them or where the credit bureau benefits them is it significantly reduces the time it takes for them to do a risk assessment. That's number one. Because at the time of doing the risk calculation and then the risk assessment, no longer do they need to make phone calls, send letters, and try and piece together what the exposure of this borrower is and also their exposure propensity to honor obligations. So everything is available in real time in a consolidated credit report. So it's much quicker for them to make that decision. It's much easier for them to make a consistent decision as well. Really, the lender wants to look at three things. Who is this person? What is their exposure? How much do they owe elsewhere? So in other words, can they afford to take this loan I'm going to give them? And then what is their propensity to honor their obligation? What is their risk? In other words, when they have credit, how do they conduct themselves? Do they pay on time or do they habitually default? Right? And so those three questions get answered in one credit report in real time. They can see all the KYC information, telephone numbers, addresses, and that matches what they have. They can see the full exposure of the borrower, where that borrower has credit with other institutions. So in terms of like how much they're owing, how much they pay monthly, what's the outstanding balances, and then also very importantly, how they conduct themselves outside of my institution as well. Like, do they pay their obligations regularly and on time? Because that means that if they're a reputable borrower, they're going to honor it's likely that they're going to honor their obligation with me as well. And so that makes it very easy for the institution to give credit based on their lending criteria, and also it's much quicker in real time. It significantly reduces NPLs because lenders can now see who are good payers and who are habitual defaulters. And of course, it's going to be difficult to get credit if you're an habitual defaulter. Doesn't mean that the institution will deny you the credit, right? But they might say, we need a higher demand for collateral, we might increase the interest rate, or we might reduce the loan amount to can manage our risk. So they might still give you credit if you have a very poor score, right? They can also increase their loan portfolio size quite substantially because now they can see the risk factor. And so for those borrowers where historically they would limit their exposure because they don't know what the risk is, now they can see the borrower is a good paying customer, the exposure or the affordability allows, and the KYC is all good. So they can say, well, we can increase the loan amount here. We can offer different products to this person. Let's even offer them a home loan or a vehicle loan, or let's keep them with our institution. So,
correct.
So what we actually find is that institutions grow their portfolios as opposed to the credit bureau is not restrictive. So their NPLs come down, their portfolios grow, their cost of credit significantly comes down. And so the bottom line of a financial institution looks a lot better. So when they look at the audited financials, there's less provisioning for, IFRS 9 default, so overall it just increases the efficiency of a financial institution.
And of course, they're looking to be happy at the end of the day about all of that.
Absolutely.
Yes. So on to the customers. We've discussed the benefit to us as a region in terms of the financial institutions, how it will improve efficiency. The customers now, what does credit reporting offer them?
First of all, to the consumer is that they can get access to credit in much quicker time. Imagine a single parent, a single mom on a Friday night realizes she needs $100 or $200 to get through the weekend. But where is she going to get it now? Right? Everything's closed. It takes 2 weeks to get a loan application. And so the access to credit is just not there. Whereas with the advent of a credit bureau is that we streamline the credit granting process with financial institutions, automating a lot of their systems so that the application process is often even in real time. So we've seen this in some of the regions where we've implemented a credit bureau. You can log into your phone and request $1,000 and it's immediately released because there's no manual intervention in the background. All the information is available to a lender to automate the decisioning so that they can give credit in real time. And that will be available here in the ECCU very shortly. So that means that borrowers can have access to responsible credit in real time and also potentially at reduced costs as well.
That would be a game changer.
It would be a game changer, imagine. Yeah.
I can't even put words into it because, like you said, sometimes you want a small amount of money just to make ends meet. Then what you outlined is a very real situation, but then you have to wait 2 weeks and then sometimes end up paying exorbitant rates for these small amounts. So imagine having a system where you can literally apply for credit over the phone.
Yeah, over the phone.
And have that financial freedom and access.
And that's only possible with the credit information, efficient credit information sharing ecosystem. And we can't blame financial institutions. They have to curb their risk. They have to know that they're going to get their money back. But without transparency of how we conduct our business outside of their institution, they can't take the risk. And so with the advent of a credit bureau, they can offer different products and different channels, digital channels, different products, different ranges. And so that, of course, spills over to the benefits for consumers because now we have access to responsible and affordable credit.
So, Van, we've talked about benefits for customers and the benefits to the lenders as well. Let's talk about some of the instances, non-desirable things that may happen in this issue of credit reporting. For example, if I note that there is some incorrect information on my credit report when I access it, what can I do to correct that incorrect information?
Log a dispute. We call it a dispute, but it's actually an inquiry into the information that's on your credit profile. And that's very important. I mentioned that the application will have a facility to do that. Also through our website, there's a log a dispute where consumers, if you feel aggrieved that information is incorrect, definitely go onto our website, log a dispute, and our help desk will then contact you to work through that. The legislation allows for 10 days. Credit Bureau has to investigate it within 5 days, reach out to the financial institution that submitted the information in question. They have 10 days to correct it or to report that the information with supporting evidence, contracts, statements, to say that the information is actually correct. And then we also look at who that information was given to. So for the bank that initially checked, we have to notify them that the information is now corrected and that the data subjects report is now cleared. So that's also very important, is that legally there is recourse to incorrect information, right? And that puts the power back in the hands of the consumer.
Yes. Van, thanks so much for speaking with us. You've outlined quite clearly how the credit bureau operations in the ECCU will make accessing credit so much more affordable and easier for the citizens of the ECCU.
Thank you for having us. We are enthused to be here, and we look forward to making a real and measurable positive impact in the lives of ordinary members, or should I say consumers in the ECCU, and we look forward to that.
And now for this week's financial tip.
Develop a habit of saving by setting aside small amounts regularly. Be consistent.
We're at the end of this episode of ECCB Connects, where we've been discussing credit reporting in the ECCU with CEO of EveryData ECCU Limited, Van Reynders. He outlined some of the benefits of credit reporting, including that it improves efficiency for financial institutions by reducing the time it takes to conduct a customer risk assessment. Accessing credit also becomes faster and possibly more affordable for consumers. Reynders also outlined how you can query and correct information on your credit report. Thanks so much for watching, and be sure to join us next week when we bring you another episode of ECCB Connects.